So today I'm going to talk about what are the beginner level projects that you can do in quantitative finance, right? If you are a student and you are exploring a career in quantitative finance, or you are a working professional who is interested in quantitative finance and also interested to make a move to quantitative finance, there are some beginner level projects that you can start on your own, and that will really help you stand out in interviews, and you can even talk about these projects in the interviews. All right, so I'm going to talk about some of these projects that you can easily get started, right? I am assuming that you have genuine interest in this field and you are not coming just for the sake of coming, and you are not interested for wrong reasons, right? There's a perception that because a career in finance pays well, uh, that's why we are interested. I highly recommend to think about it a bit, whether you're genuinely interested or not. If you're not genuinely interested in the field of finance, then you probably won't like it, and then you will do something else. All right, so let's get back to the topic. So what are the projects that you can do as an absolute beginner, right? And I'm assuming that you have some sort of qualification in a quantitative field. That means you have a bachelor of science or a master of science, or a bachelor of tech engineering, or you are a PhD. That means you have done some kind of mathematical work in the past. Need not be just in finance, but you have done some mathematical work in any area, right? Whether it's physics or mathematics, statistics, economics, econometrics, mechanical engineering, civil engineering, biological science, life science, medical science. You have done some scientific work in your life. You have studied some scientific subjects in your life. That is what I'm assuming, right? If you're someone who has never studied any scientific subjects, right? You come from a background of like history or political science or psychology, right? Well, in some liberal arts area, I see even use of uh, statistical modeling, but most liberal arts degrees don't teach you anything about the mathematical statistical stuff. So if you're coming from that kind of background, this video is probably not for you. So I'm not discouraging you. Obviously, this you can always learn these things, and it's not rocket science, I would say. I think if you put in about a year or two, somebody who has never done mathematical work in her or her his education, you can still do quite a bit. So I'm not discouraging you, but I'm assuming that you have done any of this academic qualification. You have this qualification, or you are in the process of completing this qualification, and you are interested in quantitative finance, and therefore you are exploring how you can get started, what project you should do, and how to go about things. So I'm going to talk a bit about the projects. Okay so um, okay so the first thing I would say is that before doing any project, it's good to learn a bit first. I mean, learn the theory a bit, learn the field a bit, right? There are many ways to do that. Either do certifications or do some courses, or learn from books and videos, right? It's always good to learn in a very organized way, in a very structured way. But if you do not have access to, you know, a, courses or mentors or certification programs, then it's good to also, you can definitely learn on your own, and go through some good books and watch some freely available blogs and videos. You will get a feel of the field, right? And because you have done some scientific work in the past, as part of your coursework in bachelor, masters, or PhD level, you can easily understand the mathematical stuff used in the field of finance, not rocket science. And some of the finance jargons can be a bit intimidating, but that's not a concern in my view, because as you learn the field, I think you will start getting used to these new jargons. So nothing fancy. I mean, initially when you learn finance, you get scared a bit because people use way too many jargons. But every time you come across a new jargon, just read about it a bit. Just read the Wikipedia page. Nowadays, you can use even ChatGPT and other such tools to know more about the jargons. So it's and without working in the actual real world, actually, it's never easy to understand the jargons fully. So finance jargons can intimidate you, but there's no reason to feel intimidated. Okay, but I highly recommend you to first learn a bit about this field before starting a project, right? So learning in the field, it will take probably a couple of months time, maybe 1 2 3, depending on how much time you put in, and then you can get started with some projects, right? If you have done statistical modeling, machine learning, more data analytical work, then you can quickly get started with, let's say, um, you know just doing some prediction, right? It could be predicting stock price, for example. It's a classic example of that's probably the first project people do when they learn quantitative finance, right? Predicting stock price is actually not an easy thing. It's perhaps it looks like a beginner level project. It's never a beginner level project because there are so many other reasons why predicting stock price is not an easy thing. But do the work yourself and see why it is not so easy. And if you use some of the models that you have learned as part of your course and see actually whether you are able to easily predict uh, value of an asset. It not be just stock, it could be also any other financial asset. It could be any commodity, for example oil or gold price, silver price, anything else. Just take the time series data. Okay, so do a time series modeling work. Okay, it could be asset price prediction or asset return prediction. Okay, that could be one good beginner level project. Don't worry too much about the accuracy and so on, because building a good model for asset price forecasting is super difficult. Even the seasoned quant professionals do not do a good job many times. So don't feel bad about it. Okay. In the field of finance, one of the very interesting problem is actually to know whether uh, like like what will happen in the economy, right? um, and there are many economic indicators, for example interest rate, inflation, GDP growth, unemployment, house price index, commodity price index, uh, and exchange rate and so on, right? There's so many macroeconomic parameters out there, and for each and every financial service organization, whether it's a hedge fund, whether it's a bank or insurance firm, or it's a sovereign wealth fund, or it's a private equity firm, it's a venture capital firm, you name it, right? Any financial service company in the world is concerned with the macroeconomic parameters, right? So it's very important, therefore, to know what will happen to these parameters in the future, right? So you have a forecast, right? So one other project you could do is that forecasting macroeconomic variable. Now, forecasting stock is a bit different than forecasting macroeconomic variables, because stock is just one type of asset, right? So it doesn't take into account what will happen to many things around you. But forecasting macroeconomic variable is actually a lot more interesting in a way, because it's somewhat easier actually compared to, let's say, asset price prediction. Some people might differ on that, but forecasting interest rate, forecasting unemployment rate, it's relatively easier, because in finance there's something called, you have the macro issues and you have idiosyncratic issue. I mean, the stock price prediction is related to also macro factors, but also it's the problem with that particular asset or that particular stock, right? So forecasting therefore can go really off at some point. But forecasting macro variables, you always have a bit of a pattern there, so it's a bit easier. Okay, again, try all kinds of time series models you have learned. do a bit of research about the academic macroeconomic forecasting. If you're doing forecasting of interest rate, just do a bit of research on what are the already available models, published models, models which are written about by academicians and published in good journals. Reproduce that using the data that you have taken for the recent periods and see. Okay. On the lending side, you can do many interesting projects. You can do, building a scorecard. A scorecard is nothing but it's a credit scorecard, right? I'm sure you know what credit scorecard is. It's like, giving credit score to a customer, whether the customer is a good customer, potentially good customer or not. So it's about assessing a customer's credit worthiness, right? So providing a rating to a potential customer, right? So take data set, and you can use all kinds of econometric and machine learning model that you have used, and build a scorecard model. Okay, so scorecard development is a classic machine quant finance project that you can try as a beginner, right? You can also do, for example, optimization related work. That's something I have done in the past when I was studying. You know, for example, portfolio optimization might be slightly complicated for beginners, but very interesting. Just do what should be the allocation of capital. Imagine somebody has 100,000 capital, $100,000. How he should or she should allocate capital across different assets, commodities, equities, and bonds to get a good, um, risk adjusted return. Risk adjusted return, not the only return, the normal return, but risk adjusted return. That means taking into account the risk aspect of investment, right? And take a benchmark and see what is the best allocation, right? Very simple project, looks a bit simple, but when you actually do it, can be a bit more confusing. Okay, these are some of, you have to use like the optimization, the operational research models, and so on. If you have done mathematics and studied operation research, there you can use whatever learned there in doing this project. If you're coming from econometrics background, right? If you've studied econometrics or statistics, you can try a project on volatility, right? I think volatility is very crucial thing for many reasons, right? For risk management, for portfolio steering, for investment purpose. Understanding of volatility and forecasting volatility is very important. So you can forecast the volatility of a given asset return for the future. So you can use like the arch and garch model, that kind of models in forecasting volatility for the future. If you're coming from physics background, right, you have done physics, you probably have done statistical physics, right? Statistical physics, right? There you would have done the Brownian motion and a bit of um, sorry, Brownian motion is also used in many other areas of physics, but okay, you probably have done all kinds of statistical distribution and so on, right? uh, if I remember things that I learned long back in my during my graduation, the Bose-Einstein statistics and so on, right? So again, it's about fitting statistical distribution um, to the data in physical science. You can use the same concept to fit statistical distribution to the financial data. You can take any financial, there's gamut of financial data out there. Just take any financial data, equity data, bond data, and so on, right? So you could try those projects, right? Pricing is an interesting problem. Like how to price something properly, and pricing is such a broad concept actually in the field of finance, right? It's like how what is the best way to uh, charge interest to customers, right? That's an interesting problem, right? What is the It's called risk-based pricing, risk-based pricing, right? So what interest rate you should charge the customer so that there is a maximization of profit for the bank, but at the same time you do not lose customers, right? That's an interesting problem. So explore more on that, right? Again, pricing of asset, right? How to value pricing of asset. That's also an interesting project. For example, how to price the value of a house, right? House price or valuation of a property, right? That can also be an interesting project, right? Just think about it, right? You will take location data, you will take uh, all kinds of other data, even macroeconomic data, just to build a model that values the price of houses in a given city, in a given province, a given country, right? That can also be a good project to begin with, right? On the trading and investment side, there are many such projects you can do, like just picking the stock, like which stock to pick out of thousands available stocks or 10,000 available stocks, right? Can be an interesting project. So what are the criteria to see, like, you have the different factor models, right? Don't worry about the jargon. Factor models are nothing no rocket science. You can easily learn them, but it's just about using some econometric modeling technique to select the best set of stocks out of the thousand stocks available for you, right? So what is the combination of stocks that gives you the best return out of the thousands of stocks available, right? You can also do that for multiple countries, right? How many stocks I should select from the US, from Europe, from Japan, from emerging market, so that it becomes a best combination of stocks in my portfolio, right? That's an interesting problem, right? So it's about the diversification and so on. Think about that and how you can build models for that purpose, right? Understanding the potential losses in your trading, okay? As part of market risk, people build such models. Just think about, imagine you are a trader, you are trading all the time, but imagine how in worst case scenario, what is the amount of money that you probably will be losing over a 10 days period, and you are trading on a daily basis, right? That's an interesting problem to think about. Just think about how you can do the prediction, how you can know well in advance that what could be a potential loss over a uh, week week time or a month time and so on in worst case scenario, right? uh, Beyond that, you can also build models on extreme events like fraud taking place. This card companies, especially the payment company, right? Fintech payment company, these companies actually worry about frauds happening in their company, right? That's a very interesting quant finance problem. um, what else? Anti-money laundering, a similar problem. There also you can think about, you can use machine learning algorithms to solve problems there. Okay, so these are some of the very basic projects that you can get started with if you're going to be working in quant finance. By the way, there's no limit to how many projects you can do, but I would say just pick a couple of them and do the projects, and put your code on a GitHub, and showcase that on your CV when you go for interviews, because and then you have something to talk about in the interview beyond just your CV, beyond just your academic qualifications and so on, right? And when you do these projects for the first time, don't worry too much about prediction accuracy. It's not just about the results, it's about the process, the steps involved, and the things that you learn in the process of building models, and doing things. Somebody asked me whether doing a proper implementation, writing a software is also important next to building a model. Yes, actually, I would. During the times when I started my journey in the industry, it wasn't less. It was not that important, because back in those days they used to have like proper IT teams to do the implementation work. But increasingly, quants are being asked to do the implementation themselves. So people now expect, not in all areas, but in some areas of quant finance, that you are not just a quant, but also you are a reasonably good software engineer. So you build the model and then you go for implementation, right? Or the production, to push it to production. And after what comes out is just a piece of software, right? So if you can do end to end and build a web application, mobile application, right, uh, on top of the model, I think that's wonderful. And if you can use some cloud infrastructure, some freely available cloud infrastructure, if at all you have access to, then you can also talk about that in the interview, and that really will impress the guy who will be interviewing you. Okay, any questions? Let